Hey traders, welcome to Charts and Coffee. Great to see you all here. All right, so let's get to it. I think, really today's session is really about how the markets are going to prepare in front of the first two-day testimony from Powell. Right now, it's not as if we don't have any significance wrapped around the first trading day of the month. It tends to be that we see redemptions at the tail end of the month, and then we start to see reinvestment in the beginning part of the new month. Now, that is skewed. That was a white paper that was written some time ago. That rhythm, that monthly rhythm of the market, it's somewhat skewed because most of the data that influenced that white paper, through no fault of the researchers, but most of the data was during a ridiculously strong uptrend that, generally speaking, when you step back from 2008 and the most lax monetary policy for an extended period of time that we've ever seen, it's kind of skewed to that. So the markets are in an uptrend, which I don't believe they are right now. But if they are, there tends to be some strength going into the beginning part of the month. So again, these are all tendencies. I think a lot of folks take seasonals or certain rhythms that they notice in the market and view that as a setup. We don't want to do that. We want to make sure that we understand what the tendency might be. And then if there is a setup that is dovetailing with that tendency. So be careful thinking, well, it happened. There's a tweet that I saw going around on Twitter. Of course, it's a tweet on Twitter. And it was something along the lines of, I think once or twice before in history, major downtrends accelerated something like 55 days after the peak. Oh my gosh, it just set the financial Twitter world ablaze because, oh my gosh, we have this 55-day thing. And again, it's so easy to want to say, well, this happened this way, or this seasonal is about to hit, or this is the tendency at the beginning or end of the month. Please make sure the underlying structure is still there. So, by the way, speaking of Twitter, and I'm very excited for this, and I don't know that I shared it with you all yesterday or not. This one right here, Gaming Wall Street, the official trailer. And I share all sorts of craziness on my Twitter feed. I know a lot of you are following me there, but check this out. It's on YouTube right now. It's the Gaming Wall Street documentary that's going to be out really soon. It's all about GameStop, but not just GameStop, but what the GameStop story revealed about Wall Street and about hedge funds and things like that. It looks really, really good. Yeah, absolutely. And then I had some fun with the, how many of you play with that celebrity? What celebrity do I look like? Oh my gosh, my sister and I were having just a laugh fest with that over the weekend. So yes, unplug from the charts and enjoy some which celebrity do you look like filters on Insta. All right, with that being said, let's get to what this show is all about. Your questions. Remember, we've got Powell, we've got the beginning of the month, 2 days of testimony, wrapping up with non-farm payroll. Notice I haven't talked about a certain geopolitical situation. I don't even want to mention that because way too much is being made of that in terms of impact to the market. Okay, gang, I know there's articles. I was just reading this on Wall Street Journal. Russia-Ukraine war risks putting Fed in a bigger bind. Their big bind is inflation, right? So I'm going to read that article to see, what it is that seems to be so important. But at the same time, just keep aware that the larger force on the market is economics, and that it is right now really, frankly, comical to think that as terrible as Ukraine is, and as much as a volatility catalyst it has been, it is not macroeconomically valid. It's not even macroeconomically impactful at this moment. I know that sounds crazy. Listen to me now, believe me later. I know, like many of you, we have traded through plenty of geopolitical issues, and you will recall that at the end of the day, when everything sort of settled down, and it usually does, right? At some point, our memories are quite short for these things. We go right back to, all right, what are the central banks doing? Anyway, let's get to it. First question, Julian, how are you? Question about volatility. Perfect question. Um, do I measure daily price movement range every day for every asset before entry? No, Julian, I don't. Usually, when I will consider DPMRs, is if I want to consider another, just an alternative to a price based target, or if I see a relatively large candle, right? Some candles just visually look bigger than the other ones. And when that happens, I want to put a measuring stick to that candle and then determine whether or not it is beyond the typical historical volatility. So that's the way that I do it. Every day? No, not really. If I'm looking to see if a particular trigger, for those of you in the Sector Secrets Master, the futures room, or heck, even in the options room, you know that I send out a trigger that accompanies the trade. In other words, I don't send you a get in now, get out now signal. I want you all to prepare for trades the same way I do. So if I know there's a level at which I want to get in at the time that I like it, that's an alert. Can you imagine if your GPS told you turn right now versus turn right in a quarter mile? I'm the latter. That's the way I think about trading. And that's really the way I think most of you do too. So, I will look for those as I'm setting up a trade. Julian, I might look at those once I've decided that this looks like an unusually large candle, and I want to get an idea of just how unusually large is it compared to historical volatility. All right. So not before entry, just usually as warranted. All right. All right. Next up, Bob the trader wanted to share a notice of the where will it? Oh, so thanks, Bob. So we will send out the email at some point. Here from Simpler when we have that link. I'll let you know. I will absolutely let you all know. It's a week from tomorrow, March 9. Pencil that in. I should have a link this week, or I sure will ask someone for it because we need it. I know a lot of you are waiting for it so you can register, because even if you cannot attend that session live, I encourage everyone to register, because then you'll get the recording. Daryl is amazing about getting that out very, very quickly. And then you can watch it at your leisure, either rewatch it or catch it for the first time if you can't attend live. It will be broadcasted in the Simpler Trading webinar room. Okay. So we'll get all that information to you all hopefully very, very soon. All right. Thank you, Bob. Hey there, Kathy. For those of us who would like to get exposure to agricultural products, what levels would I look at for DBA? The spread on the 34 EMA wave is really tight. So there's a couple ways you can look at ag. Corn, CORN, SOYB. Oh, we have a link. Oh, hang on. We have a link. Hang on. Timeless. Ooh, I like that. I do like that. Timeless. All right. simplertrading.com/timeless. Ooh, I like that a lot. Cool. So I'll get that on the screen. So as far as ag exposure goes, and if you don't want to be trading necessarily the futures, which I know not everybody wants to, I totally get that. So if you don't necessarily want to be trading the futures, how would you then position yourself in this ag narrative? And what I would say is CORN, SOYB. That's another really good one. And I would also recommend, of course, DBA, right? We know that Archer, Daniel Midland is a great one to watch. Tyson's been a cool one to watch in the agribusiness, right? So as far as DBA goes, I would not venture into DBA until we notice corn and soybeans. Corn and soybeans have slowed down. A lot of folks have asked me about wheat. Gang, unless you've got the Dramamine handy, the more organized, the better structured trends are and have been. This is so important. They have been in corn and soybeans. They've been part of the inflation narrative. I don't need to wander into the wild west of wheat on this Ukraine narrative. I know it looks very sexy and and so forth. But stick with what we have been talking about for months. What trends were already established before the geopolitical turmoil, right? So that's where it may not look as sexy, but it's remember, risk goes both ways. At some point, let me tell you how the story in weekends. Eventually, and this has already happened, and this is why I don't, this is where it's such a noob move. Don't do it. So all of a sudden, folks see wheat breakout, right? We see this resistance back in here. Everyone gets their, maybe some folks get their attention there. Those are smart breakout folks. Other folks might watch this move, but some for some reason. By the third day, everyone thinks, oh my gosh, FOMO. Something about that third breakout candle and FOMO seem to jive very well. And then they get long, usually right at the top of the range, only to get absolutely hammered. Like, how do you think wheat is going to end? It's going to end a lot of times the way silver does, in tears. So focus on the trends that are already clearly established. Focus on trends that have something other than geopolitical turmoil fueling the rocket ship. That's corn. That's beans. Okay. So DBA, when corn and beans level out, I'm with you. I think we're in the zone right now, but it's going to be 21 to the wave. Look at that nice vol. Oh gosh, look at this beautiful volume ledge right here. See that right there? So that's what I would focus on. You know, dips into the wave, and ideally maybe some volume accompanying it. 21, I think the 21 level might be a really interesting one there too, right? So you could probably buy the 20 strike. I would go with the 20 strike and the calls in DBA. All right, next up. Hey there, Jack. Would I consider the ETF ITB a shorting candidate? Ooh, yes, I have no problem with that. Somebody asked me about XLRE, which is sort of related to this narrative. XLRE, ITB, XHB, absolutely. Double red, downtrend, south of the 200 propulsion. There's just so much to like about these. And then remember, once we have a read on the tide, XLRE, ITB, XHB, even VNQ, I would keep an eye on. Once we get a read on the tide, now we can start to look within the tide at the individual boats for outperformance, better structure to the downside. So, and that's exactly where your question goes. What about Pulte? What about DH Horton? What about Lennar? All of that is yes. So what I teach in the Sector Secrets Mastery, Jack, is this. If I like most of the top heavy-weighted stocks within a narrative, the tide, then I'll try to go with the tide and entry there rather than pick a boat. You know, why pick a boat when I can bet on all the boats? So that's my thinking. So yes, I'm fine with all of that. Absolutely. Okay. Next up, RF Brandon Raghee. Oh, I'm brand new to your mastery. Love your style. Very cool. Curious how you create watch lists. Well, if you're brand new to the mastery, you'll be able to join me when I do that on Wednesday. But how do we create watch lists? Sort of like the question, well, actually exactly like the question Jack just asks. Tide boats, index, sector, stock. We look at outperformance with a top-down approach. That's exactly what we do. And we actually have a long and short book right now. In other words, we have a number of places that we've been looking long, whether that be Coke or whether that be Altria, whether that be crude oil, USO or CL, whether that be energy. We have a number of long positions, but then juxtaposing that, we've got a number of short positions, retail, consumer discretionary. We were short the Qs way back here, right? Short IWM. What else? So depending on which corner of the market you're focused on, you know, we're going to create bullish watch lists and bearish watch lists. What are those things that we want to buy on dips, and what are those things we want to short on rips? And since you're brand new, we'll be doing, well, actually join the room today. I mean, obviously, jump on in there. You can meet everybody that's in the room. And then Wednesday afternoon at 2 p.m., we have our weekly live trading. And by the way, for those of you that have been curious, hey, what are you doing in the mastery, Rog? You know, what are your results been? It's been a weird couple of months? What have your results been since through January and February? Forget the stuff that was trending last year. Who cares, right? Most 3/4 of 2021 was a trend. What happened in October, November, December? How have you been doing this year? I think that immediacy matters, right? So we're going to be diving into all that. We've got, and all my cards on the table. We're going to talk about what we've been doing. I'm going to talk about the free tools that I've made available over at countdowntrader.com, the free layouts that I've made available to members, what I've been doing with those tools. And then we're going to have a really, we've never done this before. I don't know if we're going to do it again, frankly. We're going to have a really great way for those of you to try out what we've been doing in the mastery. So I want you absolutely aware of what we're going to talk about. I'm going to show you what I've been doing, why I've been doing it, and which tools I've been making my decisions based on. And then we're going to have a really great mastery offer for you all. So, that's simplertrading.com/timeless. All right. Okay. Next up, what else do we have here? Bear with me again. Let me go down the list. Can we take a peek at IWN and NVDA? So IWN. If I'm going to look at any market to the short side, Zion, being below the 200 helps, but this is still a choppy corner of the market. So we should get rejected. I think if we're looking for rejection, it'll be probably in this area right here. So we have one part, the 200 propulsion. That's cool. And we have another part, there we go. We have another part. Why won't this let me change the color? We have another part, the Darvis overhead, and a pretty nice volume ledge there as well. So more about really an overbought environment. Keep an eye on the 21K 3D slow stow, which is what I've got running here. This is a choppy trend, but clearly just the sheer number of red grab candles tells us this is definitely chop, but it has bearish directional bias. Focus on the ceiling or the zone of resistance and fade that. Take advantage of movement to the downside. All right. So, couple quick questions here before we run out of time. What's my take on oil? Q, it's the same one that I have had for months, which is buy the dip. This is not anything to do with geopolitical issues. This is a 1, 2, 3 that started and triggered in the very beginning of the year, and then the overall uptrend. So bullish, absolutely bullish. As far as IWM, actually very similar story. Zion's, yeah, whether it be N or M, same story. As far as the VIX goes, yeah, I've been getting a lot of questions about the VIX as well. When we start venturing over 27, notice I brought up the futures, the VX contract. So when we start getting above 27, 26.80, 27, we're in the more what I call the Dramamine part of the market, right? Very easy to measure this. This is not fancy footwork here. We are not making any significant new highs despite what's been happening. Every time we get near this, you can see there that purple to yellow zone, right? And there, we have not been able to maintain movement through that. So be aware, this is a neutral market, and that's where your resistance is. When we get back down below 27, usually things start to normalize in terms of volatility. So if you wonder, well, Rog, what do I do north of 27? How do I manage this? Maybe smaller position size, more discerning, focus on trends, more conservative triggers. This is how you can use volatility to get a better idea of what type of risk and position sizing you should use. So in the last few weekly sector and macro notes that I've been sending out to everyone in the main rooms, right? Options, I think we threw it in the training room too. So options, futures, my mastery, the training. Check out those notes. I've got a chart that looks a lot like this with the levels that show you where sort of the normal volatility is at using the VX futures and where the higher volatility is at, and how you can use that to determine what kind of position sizing you may want to consider. So if your budget, for example, is say 5,000 per position, or maybe 3,000 per position, what are you allowed to spend, right? Maybe you bring that down by 25% when we start trading in the Dramamine zone of the VIX. So those are things to focus on. And I'm actually bearish. This is an overbought VIX zone. So I'd be looking at puts. I'd be looking at the volatility not to increase. Okay. So I know a lot of folks think, how come the VIX isn't going crazy? Remember, I think half the reason the VIX got up here in the first place was the ramp up to what's happening in the Ukraine. Remember, the markets start to discount, guess about what's going to happen, not necessarily actually reacting to the reality. So much of the elevation of the VIX happened before everything we're hearing now. So we would need a brand new shock. We would need sort of a ratcheting up of what's going on for the VIX to be shocked. Heads up, though, because with Powell coming this week, keep an eye on the bonds, keep an eye on the dollar, and yeah, for sure, keep an eye on volatility. Okay. All right. So I look forward to seeing you all tomorrow for Charts and Coffee, same time, same station, like we do every single day, Monday through Friday. And then for those of you that, we have these notes, we have these weekly notes that go out. I'm going to be doing a special session for those notes. A lot of you have asked me a lot of really great questions about many of these, the sector and macro notes. And we're going to be having a special session, heads up for that, Sunday at 6, okay? Right here at the Simpler Trading YouTube channel. So maybe throw that in there. Remember, Sunday, we'll talk about some of the macro factors after we get non-farm payroll. And then Wednesday, that's going to be the big day. Rog, all right, let's see where the rubber meets the road. How has January and February been treating you? And we'll get into all that. All right, I'm looking really forward to doing it. Everyone, be good to each other. I'll see you tomorrow. Same time, same station.